I think alternatives are popular because clients and advisors are constantly looking for a better outcome in their portfolio. They've been disappointed with some of the returns they've had, and they've had very good returns in the fixed income side of their portfolio, but given where they see the interest rates today, they know they have very little legroom left within the fixed income space. So there is this desire, they know that asset allocation still matters, and I need to find diversifying places to get that, and they can't just get it in the style boxes of equities, and even in fixed income, there's limited opportunity. So alternatives tend to be very popular because it's the constant search for finding the next diversifying asset.
I think some of the most important questions that advisors are asking about alternatives are about their diversification potential, what the right proportion is to how much of an alternative to incorporate into a portfolio, exactly what the role of the alternative is, and trying to develop a more granular understanding of all the different types of alternatives that lie under that broad umbrella.
Advisors can become more educated about alternative investing simply by speaking with as many managers as they possibly can and being aware of what comes out. The last thing I want an advisor to do is simply paint all alternative funds with the same brush. Dig into the strategies. Has this strategy worked as a hedge fund for the past 5, 10, 15 years? And if so, and if it's not changed fundamentally by bringing it into the mutual fund confines, then you should be able to deduct from that it will work going forward.
So I think we do have to do a better job as investment managers in terms of providing that sort of education, providing that sort of those tools for advisors to be able to utilize with their clients to explain, why are we looking at this asset class? Explain what it is. Explain it as a risk management tool, not something that's going to put high octane into the portfolio, but something that's actually going to go the other way to help over time smooth out their investment returns.
In the future, I see alternative investing changing with regard to how investors understand it. I think that investors and advisors are every day are becoming more experienced and more sophisticated about the source of alpha, what's beta, what's truly diversifying versus what has hidden correlations. On the manager side, and which is to say on the product side, it's hard to say sort of what the future brings. Hedge funds are always looking for new areas, new opportunities to add value or to create alpha, and that's one of the neat things about the industry is that managers tend not to pigeonhole themselves, but to try and remain as unconstrained as possible in order to take advantage of opportunities as they arise.